Welcome to this week's look at the state of the New York City real estate market. This is for the week of February 12th to the 18th. We're going to get started with the luxury market, then take a look at what happened in Manhattan and Brooklyn. Then I'm going to sum it all up, give you my thoughts, my takeaways, my absolute best advice to buyers and sellers who are active in this market. I will say this. The worst does seem to be behind us. We've had a big shift in the market. And if you are an active buyer or seller, you're going to want to stick around and hear about that. Okay. There were 26 contracts signed in the luxury market. Remember, luxury market in Manhattan starts for properties that are priced at $4 million and above. 6 of those were in the trophy category. This is 5 more contracts than were signed for the previous week, so definitely a good showing there. The number 1 contract was 23A at 730 Fifth Avenue. It was asking $56 million. It was reduced from almost $66 million when the building started marketing back in January of 2020. It is about 6,300 square feet. It takes up the entire 23rd floor. It includes 4 bedrooms, 5 bathrooms, a library, a home theater, and a powder room. Ceiling is about 11 feet, and the rooms are quite large in scale. The apartment is in the Amman, New York residences. This is a 22-unit condo project. It sits above the 83-room Amman Hotel. This condo has its own private entrance on 56th Street, and residents can access the hotel amenities, which include 2 restaurants, a jazz club, and a 25,000 square foot facility with a lounge, a spa, a fitness center with a pool. The number 2 contract was 43A at 200 Amsterdam Avenue. It was asking $22.5 million. It was raised $1 million. Since the building started marketing back in September of 2019, this new condo unit occupies the entire 43rd floor. It has almost 4,700 square feet. It includes 4 bedrooms, 4.5 bathrooms. This unit spans nearly 100 square feet, overlooking Central Park with 2 balconies totaling 274 square feet. It also has city and Hudson River views. Amenities in this building include a fitness center, a 75-foot saltwater pool, yoga and Pilates studio, a golf simulator, a meditation room, men's and women's steam rooms, infrared sauna, lounge, children's playroom, and a landscape terrace. That is it for the number 1 and number 2 contracts. If we take a look at the total weekly asking price sales volume, we see the total is $250,580,000. Average asking price $9,637,692. Median asking price $6,172,500. Average discount from original ask to last asking price 11%. Average days on market 673. Okay. That is it for the luxury market for last week. We're going to shift over and take a look now at what happened in Manhattan and Brooklyn. If you are an active buyer or seller, you're going to want to stick around for the end of this report because you're going to want to hear about what's happening and strategies that will be very helpful for you to be using so that you can be successful. Okay. Any questions, please post them below. Always happy to answer those. You can always also reach out to me directly at Sotheby's. So we saw a tiny little bump for the supply. New supply, 334, up 5%. Contract signed, 213, down a little over 10%. And the off-market properties, 119, down also over 10%. If we look at the monthly supply, we see 1,205 coming on the market. That's up almost 55%. Contracts signed, 833, up almost 26%. Off market, 457, down to almost 23%. If we take a look at the market pulse, we see that this has definitely shifted out of the buyer's market. It's moving up kind of into the seller's market territory. Again, as I've said, this market pulse is definitely a reflection of the balance between supply and demand. For right now, you can see that things are a little out of balance. We're definitely seeing more demand than more supply. If we look at the liquidity pace chart, this 30-day moving window of contract activity, 832, we see this is definitely on the rise, the contract activity. As I mentioned, we're definitely seeing a shift in this market. It is up almost 38% from last month. And if we take a look at year over year, we see this is up just a little bit over 4%. I'm going to get into the days on market and the discount to days on market, but I want to share this chart with you just very quickly. I talk a lot about how important it is to pricing, asking price being the strategy for getting people in the door and excited about a property, making offers, not wanting to lose out on it. This is our latest chart on the Manhattan discount to days on market. You can see from this chart that the units that are priced right in Manhattan continue to trade quickly with minor discounts compared to those lingering on the market over 120 days. Wow. Less than 30 days, you see 1.5% discount. Over 120 days, almost 12%. So you don't want to be one of those sellers who's just hanging around waiting for the market to get better. You are just going to lose money. I did want to share this with you because this is some new information. We're always tracking it, but this is, the stats that I've had on this have been a little older. So now I have some fresh stats. I wanted to share it with you. If you don't make it to the end of this report, at least you have this information right now. Okay, that's it for Manhattan. Let's take a look now what's going on in Brooklyn, because it's a little bit different than what's happening in Manhattan. So Brooklyn, if you are a Brooklyn owner, buyer, seller, stick around because you're going to want to know what's going on. Any questions, please post them below. You can always reach out to me at Sotheby's directly. Just shoot me an email. Otherwise, send me an email or post your question below and I'll definitely answer it for you. The supply for the week in Brooklyn, 161, down almost 8%. Contracts signed also down a little over 19%, 118. Off market, up almost 2% at 59. The supply for the month, up a little over 14%, 649. Contracts signed, up almost 9%, 475. Off market, 247, down almost 26%. If you look at the market pulse for Brooklyn, you see, kind of lackluster. It's kind of hovering a little bit above the buyer's market, but it's kind of flat month over month. It's up almost 42%, let's call it, from last year, but it's just a little flat as compared to Manhattan. And if we look at the liquidity pace chart, the 30-day moving window for contract activity for Brooklyn, 465. So while we do see that it is up 23% from last month, so that is good news for Brooklyn, we see it is flat from the year before. I'm also going to shift now. I'm going to take a look at this discount to days on market in Brooklyn. Here's what's interesting to note about the discount to days on market in Brooklyn. Despite the slow market in Brooklyn, the units that are priced at the market continue to trade quickly at the asking price with a slightly smaller penalty for overpriced listings versus Manhattan. Perhaps overall, it means that the Brooklyn properties are still continue to be a little more in demand for the audience that is still engaged. Again, we're going to have to kind of pay attention as the spring market progresses. But right now, I do want to shift over and kind of get into wrapping up this report for you, because it is quite an interesting market that is shaping up for our spring market as we have turned the corner and we are now into 2024. We are definitely seeing an uptick and let's call it a picking up of activity of the buyers. We're not seeing a lot of inventory, but let's break it down. Luxury market, 5 more contracts than the week before. 26 contracts signed in the luxury market. 6 of those were at 10 million and above. 17 condos, 5 co-ops, 4 townhouses, 14 were uptown, 12 were downtown. So essentially a split in terms of where the buyers are going for those properties. If we look at the Manhattan and Brooklyn markets, kind of market-wide, the supply in both markets remains low. We saw only just the slightest pickup of inventory for new listings in both of those markets for the week, but the demand is definitely, at least in Manhattan, we're seeing the 30-day pace of liquidity. We saw a 10% increase on the demand side. It absolutely is outperforming the sell side, which is why we're seeing that market pulse chart looking like we're in a seller's market territory. The Brooklyn contract activity, the demand, it picked up about 6%, but it is still lagging behind Manhattan. Let's just say this, though. Both markets are experiencing low supply. Both are experiencing relatively more demand. Manhattan more so than Brooklyn. Okay, what does this all mean? It means that the busy season seems to already be underway. You've heard me say sellers, you've heard me say, make sure you're ready by March to put your property on the market. But you know what? If you're ready now, just go right ahead and put your property on the market, because the buyers are out and looking and making offers. So be sure that you are pricing properly. You can see from the discount to days on market, you do not want to be overpricing. It will hurt you. You want to be very strategic in your asking price. First of all, these buyers are very, very informed. So are their brokers. This is a very transparent market. They can see, just like you can, where things are trading. If you overprice your property, they will see it just as you know it, and they're going to think that you're not serious. Make sure you try to get your deal done in the first 30 days. That's how you're going to make the most money. You can see it from the chart. This is not just me saying it, okay? This is not just my opinion. This is objective information. All right, here's something else to think about. This is an election year, and right now the news is pretty good. Right now, lots of things are good. Things seem pretty calm. Stock market is pretty much up. Take advantage of it. If you don't want to be hanging around, we don't know what's coming. Get your property on the market, get your deal done, and get out of the market. That is just my opinion, and it's based on 23 years of doing this and watching other election cycles and just watching what happens with time. So, all right, buyers. I'm on your side too. I work with buyers and sellers. I've been telling you that you've had a great window of opportunity, and you have. Those opportunities will likely lie in the properties that have been on the market for a while. They likely will not be so much with the properties that are just coming on the market, especially if they are properly priced. There will likely could even be competition for those. So otherwise, your window of opportunity is probably closing. There's not a lot of inventory right now. More will be coming as we move closer to March. And definitely you'll see, by April for sure, we will see kind of the greatest amount of inventory. We haven't really seen anything with adjustment on the interest rates. We hear it's coming, but we haven't really seen too much with that, although they're kind of hanging steady. So if you can work with what you have or you can pay cash, then make your move. If I were a buyer, I would expect to have a little competition. You will probably see more people at open houses. You will probably experience even more competition if you're making offers. You may find yourself with up against other buyers. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and the Olshan Luxury Report. The work they do helps me to help you to make great decisions. I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.